So I guess we're live then. Cool. In that case, hello everyone, and welcome to another edition of This Week in Crypto. If this is your first time here, this is a weekly panel call where the Santiment team and community members discuss recent crypto market events from a fundamental perspective. And we talk about interesting market insights and findings that we have kind of discovered by using our metrics and indicators. So if you have never used Santiment before, we've got dozens of tools and custom metrics, signals, and strategies, all built by using on-chain, social media, and development information to help you better understand the crypto market in general and the behavior of its specific market participants and major market stakeholders. So I suggest that you check out sentiment.net. The link will be in the description of this call. Check it out during the call, check it out after the call, and also join our Discord. That link would also be in the description. We talk about this sort of stuff pretty much every day in our trading channels. So if you don't want to wait until Friday to join the conversation, the best place to be is in our Discord. So without further ado, I'm gonna give it up for Brian. Brian, if you want to share your screen and kind of start us off today with some of your insights, go ahead.
You bet. Thank you, Dino. So the leading story for much of the past week and a half to 2.5 weeks has been all about the coronavirus. And normally I start with a little bit of fundamental metrics and looking at NBT, but I wanted to kick it off with this because we're in a bit of a special scenario right now where we have a lot of speculation as to how much or how little correlation there really is with what's happening over in East Asia and now starting to happen in the rest of the world. So what I have here is a demonstration of our emerging trends. This allows us to look at any word or words and compare them to the price of any crypto token. So right now we have the gray line overlaying here. This is representative of Bitcoin's price. And these green fluctuating spikes are a combination of the words corona, corona combined with virus, and just coronavirus one word, depending on people's preferences and how they spell it when they entered into social search engines. So right now, what we've been seeing, it basically kicked off on the 24th, so right before this graph starts, and then we started to see some very big spikes here in late January and very early February. When these spikes happened, you can see on January 30th, this had a decline correlate with it. Whether this was related, we have to say we don't know because we can't prove whether there was a direct parallel to that price retraction. But as we start to look at some of the other spikes, we can kind of make some speculation based on what has happened during most of these. So these next few in early February and February 1st and February 2nd, we started to see another slight decline right afterwards. This wasn't as severe as the one that happened on January 30th. Then the talk of coronavirus started to die down. Perhaps people thought that it wasn't as big of a deal as people had made it out to be, or there just wasn't as much news being reported in Asia over those next few weeks. But we didn't see as much, and Bitcoin was rising again. Bitcoin got back over 10,000 in mid-February, and it stayed there and did dip below into the mid 9,000s, went back above, and then fell back below again, mid 9,000s again. And then the total mentions of coronavirus started to jump up again around the 22nd and 23rd here. And then it really rocketed up on the 24th and the 26th, all the way up until yesterday, 27th. During that time, Bitcoin was at a peak of about 9,900, tried to creep back above 10,000, did not make it. And with all of this coronavirus talk, whether it was coincidence or not, Bitcoin just started to plummet over these 3 days here, the 23rd, 24th, 25th. I tried to look at the timing a little bit. I was looking at the price of Bitcoin on a larger chart here, and it's difficult to say. My assumption was that a lot of the price dumps were happening during Eastern Asia peak hours. As most of you know, this is where most of the impact is happening with coronavirus. But I don't see enough evidence to support that. I'm seeing a lot of, I'm on the West Coast right now, so if you look at the time scale right here, I'm seeing a lot of dumps happening in the early morning hours in the US, where you would expect the dumps to happen in my late hours because that would be prime time China time. So I'll spare you the details and tell you that there isn't enough correlation on the time and when prices rise and then prices fall back down for me to say that the US is trying to push the price up and China is pushing it back down. So going back to this chart over here, I'm basically seeing a lot of spikes with coronavirus and a lot of prices being pushed down during those times that the spikes are happening. And usually the push downs in price are happening most often with these spikes happening. So in my opinion, I believe there is some correlation. Some people believe that people flock to crypto during world events that are causing mass chaos like right now. But this could be a unique circumstance where we're literally talking about life or death, and there are things larger than worrying about where your money is, and fiat and cryptocurrency may not either benefit when it comes to actual outbreaks of worldwide diseases like we're seeing now. And really quickly, I wanted to open it up to a couple other team members just to give their thoughts, because all we can do is speculate in these kind of scenarios. And I don't want to be the only representation of our company's opinion here. So Dino or anyone else, if you have thoughts on this, I'd love to hear before we move on.
Yeah, I mean, if you look at our, by the way, can you hear me, guys? Because I think my connection is a bit unstable.
Yep, you're good right now.
Okay, let's see if that continues. So if you look at our emerging trends, pretty much the top 5 words are connected to coronavirus in one way or another. So most of the crypto community, based on our data, is currently, discussing the impact of the coronavirus on both the stock market and the crypto market, funnily enough. So, whether there's a direct correlation or not, at some point, this also becomes a self-fulfilling prophecy, I think. If you actually look into data, in SAN data, and you enter Corona into the social data feed, you can also kind of just gauge what the people are actually saying about, what the actual messages on crypto social media are. So basically, the way uh, these social volumes are calculated, what we do is we track over 1,000 different crypto-specific social media channels. We parse them and we track their messages on a daily basis. I think we collect over 100,000 new messages from a variety of crypto-specific social media channels, and then we plot dimensions of different words on the charts of specific assets. But what we also have in SAN data, which is available to all our SAN data subscribers, if you go to the 4 squares on the left, yep, and then you go to social related metrics and then social data feed. So it's in the right, yep, right there.
Got it. That's the one.
Here, yeah, here you can actually click on this search text and you can enter Corona, for example. And instead of just looking a summation of the amount of mentions of Corona on crypto social media, you can actually see the messages or the comments and threads that are mentioning coronavirus around the cryptosphere. And just looking at it very briefly, for me, it seems that the opinion, even in the crypto community, is kind of divided. Some people are saying that Corona is going to be a catalyst for a correction, and then if you scroll down a bit, you'll see some people saying that Corona is very bullish for crypto. That in the long term, it's actually going to be a cause for bounce back. So there seems to be quite a bit of it seems like that there's a lot of actually positive sentiment related to this. And if you look at our sentiment charts for Bitcoin, I was just checking it earlier today. Bitcoin is currently, in terms of positive sentiment, it's currently at around an 8-month high, even though the prices are way down over the last couple of days. So essentially, what we're seeing is more and more people kind of turning bullish towards, at least on crypto social media, right? Turning bullish towards Bitcoin in the last couple of days, probably because of this, because they're expecting that the coronavirus might adversely impact the traditional markets, financial markets, and hence kind of propel crypto markets as an alternative to new highs. So that's at least something that I'm seeing on our charts over the last few days, and it's interesting to see. But yeah, at the end of the day, we can't really say for sure whether there's direct correlation or not, but some indirect correlation seems to be kind of taking effect as we speak.
Yeah, super interesting, Dino. Thanks for pointing out that we have this social data feed, which I didn't even think about sharing, but it's a tremendous way to really see what some of the latest comments are among social media and what people really believe is happening. Obviously, none of these people are in control as to whether coronavirus is affecting it or not, but seeing an aggregate of all of their speculation does allow it to be kind of a self-fulfilling prophecy. If you see enough people saying Corona isn't, Corona is impacting prices, Corona is bullish, Corona is bearish, etc. So important to see what the public sentiment is at any given moment. All right, so I'm going to move on to some hard macro data now and show you guys exactly what's going on with token circulation and how it's impacting prices. Now, this is objective and does definitely impact the price. So what we're looking at now is a graph of how unique tokens are moved day in and day out compared to the market cap of Bitcoin. These are all monthly bars. What we're looking at now is a scale from red to green. There's 5 different colors used on this chart, and red represents a bearish signal output, whereas green represents a very bullish signal output. Yellow is a neutral output, and that's where we are right now in February as we close out the month today. What we see on the right are the last 1, 2, and 3 days of token circulation compared to the market cap we currently have right now, and how that ranks from bearish to bullish. The lower we are on the scale, the better. The scale we are, the worse as far as Bitcoin's overall NVT and what this chart predicts the future price to do. So anything below these trend lines here, that shows that Bitcoin is getting enough token circulation, which is the amount of unique tokens being transacted on a given day. And anything above means we are coming up short. So over the last 3 days, we've actually been having pretty good circulation in spite of what a lot of people would expect with some of the price retraction going on. Obviously, we saw a little bit of a bounce yesterday, and that was justified by what we saw here with the hash mark being well below the trend line. And over the last 7 months before this, we didn't see any of the hash marks really down here on a consistent basis. But for the entire month of February, we output a neutral month, which generally, if you look back here in late 2018, these yellows indicate the beginning of a reversal. Obviously, we can't say this with certainty, but we can say that the jump that we saw in January and February was a little bit premature in January, but is showing that it's justified in February. And we actually had more token circulation on a 31-day scale. I did the math for February, even though it's 28 days. If we went on pace for another 3 days, these 28 days that we did have a slight higher, it would output slightly more token circulation over a 31-day span in February than it did in January, which is very promising for us. So what we're seeing now is that February is in a neutral state. It's jumped a little between semi-bearish and semi-bullish this month, and it's closing out what looks to be a yellow bar here before we go into March. If we look at a few others like Ethereum, it's actually looking a little bit better. So if you're wondering whether to stay in Bitcoin or perhaps take a chance on some altcoins, Ethereum is looking like a good bet. And it's actually giving us a semi-bullish signal right now. And the last couple days are actually very promising and well into the bullish range. The 1 day is kind of covered up here, but these numbers are basically just used for comparison purposes. They all have their own meanings depending on what token you're looking at. But long story short, semi-bullish in Ethereum looks good. We can even look at something like Basic Attention Token, which is having its best NVT month since November 2018. So if this continues, we can expect to see some other altcoins like Basic Attention Token to really start to make some headway here. So watch what these NVT outputs are doing if you're a Sandbase Pro subscriber. If you don't know where to go to access it, send us a little DM on Twitter or talk to us on Intercom, and we will make sure that you can see it. Right now, we're at the very low end of the price. Yeah, go ahead, Dino.
Sorry, yeah, I think I'm on a bit of a delay as well. Actually, if you look at the token circulation for both Bitcoin and Ethereum, but basically, I think what we're seeing on these NVT templates of yours, Brian, is that the price is declining and has declined by quite a wide margin, but at the same time, the actual amount of value being transferred on the network is not. It's pretty much staying at around the same levels that they were around a week ago. So this is what will happen for NVT in these cases where we're seeing these sudden drops in price. However, the market is still sort of not reacting to it, at least in terms of stopping to not moving their coins anymore, right? There's still the total network activity, at least in terms of token circulation, which just means the amount of unique coins that are being sent or received on any given day, is no less than a week ago. Even though the price has taken a massive punch. So so I guess that should be kind of considered if we see this sort of trend continue onwards for another week or so. This would be considered a sort of a bullish signal, right? Just because the usually what we see when we see these big dumps in price, we will see the market kind of react negatively and start to be a bit more passive in terms of their dealings with the set coins.
Exactly. And essentially what Dino is saying is we're seeing sort of a very short-term divergence right now. The last 3 days has shown that under normal circumstances, the price would actually be rising, but because of perhaps external factors like coronavirus fear or something else that just isn't allowing price to go up, we are staying in the mid to high 8,000s right now. Due to the big dump that happened over the past week and a half or so. And when that dump happened, that was more justified because over the last 4 to 10 days, we actually had a very bearish amount of token circulation. So we have these charts for a reason. We look for divergences because they indicate that it's either a good time to get in compared to the price or a bad time to get in compared to the price. And right now, over a very short-term sample, mind you, we're in a good spot to buy according to this chart. Now that could change very quickly over the next couple of days, but right now we can only go with what data we have, and that says that we're actually in a pretty good spot for Bitcoin to start making a push back up, assuming external factors don't get in the way.
And so while we're on this specific topic, Brian, if I can just jump in before you move on to your next template, can we quickly go to the Bitcoin's profile page on Sandbase and look at its social volume for the last year? Because it's currently, I don't know, I think it's about a 6-month high in terms of just overall social volume for Bitcoin. Yeah. So the latest amount of social chatter around Bitcoin is, I think it's a 6-month high or more. The latest time that we've seen this sort of levels are in July of 2019. And if you actually look, I think it's a bit clearer on a 1-year scale. If you look at previous times where there was this sudden dip in the price of Bitcoin and you see the correlating social volume, you will very often see these massive spikes in social activity and people talking about Bitcoin correlating with the bottoms before we start seeing either a consolidation or a bounce back. So obviously, nothing is 100% certain as a signal, but several times in the past, this has kind of proven to be true. Especially like what's that part about around 6th of October? I'm not exactly sure which date that is, but you can see it a bit to the left. Yeah, so 22nd of September, that's a 24th. That's a pretty good example of what I'm saying. So basically, this massive spike in the Bitcoin-related chatter on crypto social media right around the interim bottom. And so this might be what we're seeing on the charts at the moment. We'll have to like keep an eye on these for a few more days. But very often in the past, this has proven kind of to be a correlation to keep an eye on.
Yeah, really great point. And perhaps the best way to figure out whether this is the spike or whether we're continuing to rise is you can measure over the next couple days, since this is happening, these bars seem to be every other day right now. So they're combining 2 days at a time. Check back at the end or in the middle of March 1st. And if the bar is lower, then we can conclude that this probably was the spike and it could be the turning point. But if it continues higher, then maybe we'll see a little more of a decline before things turn around. Is that fair to say, Dino?
I would say so. Like if you also go to just real quick to graphs.santiment.net/social, and if you look at the Bitcoin sentiment specifically on Twitter, you'll see similar sort of patterns. So I'll just give you a sec to kind of, so take the last, let's say, starting with the June of 2019. Let's take that sample size and look at Bitcoin's social sentiment on Twitter specifically. And you'll see some interesting patterns. Yeah, so if you go all the way down to the last chart,
sure.
What's it called? The Bitcoin sentiment volume consumed.
Yep.
Yeah. So just change the source to Twitter. So what this chart basically does is it calculates the difference between the positive and negative messages about Bitcoin on Twitter over the last, what is it, like 10 months, and adjusts it for the amount of actual social volume over that same time frame. And as you can see, I mentioned this a minute ago, that you can see this sort of almost 8-month high in terms of Bitcoin-related sentiment, positive Bitcoin-related sentiment. And if you look at the previous levels similar to this one, it happened right around the bottoms in, what is that, like late July of 2019. So there are, in terms of social data over the last few days, there are definitely some indicators that point to similar sort of movements that we've seen around major bottoms for Bitcoin in years past. This is something to keep in mind and keep an eye on over the last few days. Especially one thing that I would suggest to people is to create a signal on Sandbase for when Bitcoin ends up on our list of emerging social trends. So the chart or the list that Brian has shown you just a minute ago, because that can also kind of indicate a peak in social hype or a peak in just social chatter around the coin, which very often correlates with trend shifts. For a lot of coins, this is usually happening at the very top of a rally. So an appearance on an emerging trends list will usually mean that the coin is about to undergo a correction. But for bigger coins like Bitcoin and Ethereum, it can also be another way around. So it's a free signal to create on the Santiment platform. Just go to Bitcoin's profile page and click Add Signal, and you will be notified when Bitcoin becomes one of the most talked about topics on crypto social media. And it's these moments in crypto's life that should kind of give you a pause and maybe make you want to rebalance your portfolio.
Yeah, thank you, Dino. So just for everyone's clarity, whether you're a free or a pro subscriber, Add Signal is right here, right under the coin that you're looking at. Go to Add Signal, and you can go to change signal type up here, and emerging social trends is right there, and then you can type in any words you would like here and basically make it private or public. Anytime that signal fires, you can have it sent to your Telegram or your email. All right, last thing I'll go over before I turn it over to Dino and anyone else is our network growth and daily active addresses model. So this is showing the percentage changes over time for a flurry of different projects that we follow. And these are all ERC20s or Ethereum. And it's showing that network growth, which is the amount of new addresses that are created every day, has been declining since its peak in mid-February, right around the 18th. You can see here there are a few outliers like Kyber. And as many of you know, Kyber has kind of decoupled over the last week or so and been able to continue rising. Even though it dumped a little bit over the last few days, it did have one of the best performances over the past week. And Kyber did have a ton of new addresses being made, so that would align.
Yeah, listing on a Coinbase Pro will do that to you usually.
Exactly. If you're on Coinbase Pro, you're going to get some extra addresses created as people want to trade it, which makes sense. And if we look at NVT really quick and we look at Kyber, we can say that it actually was foreshadowed pretty well. Even before this, 4 to 10 days ago, well before the Coinbase listing, you could see that we were probably picking up on some inside trading going on, and some people within the Kyber team or people who knew on Coinbase that it was going to be listed, they were already circulating the token at a much higher rate than pretty much any other token that I look at. So I was monitoring this, and I actually talked about
That's
it on
interesting.
the week.
When was that that bar that you just showed for KNC? Oh, sorry.
So this is all of February. So even 4 to 10 days ago, it was basically at all-time lows for NVT. Lows being a bullish signal, and especially over the last 2 days since it was announced it would be on Coinbase, and 3 days is blended in there as well. They were all incredibly bullish days because of the amount of token circulation. But the entire month at large has been way under the usual NVT, which has allowed prices to really rocket, where it is now at 53.3 cents.
Yeah. I mean, Kyber has been on a roll for about 2 months now. I think it got the Coinbase announcement was on February 19th, if I remember correctly. But the fact that the entire month is has been super bearish from the perspective of NVT is definitely telling.
Right. And if you're worried about some price going up too high too fast and you're looking to sell, a great resource would be this NVT model, which would show you whether the rise is starting to burn out a little bit or whether it still has some momentum left. And right now, it's showing that there's still plenty of momentum left because of the amount of token circulation that's going on. So this is a great top and bottom indicator as well, in my opinion. Okay, going back to network growth really quick. My real point in showing this is that we had been mostly declining for a lot of the past week to 10 days or so. And yesterday, the 27th, we actually had a divergence where we saw all of change upward compared to the previous few days, but the price didn't really respond to it. So network growth for something like, let me find Ethereum here. Ethereum would be the dark blue. Yeah, so Ethereum was mostly flat, but just had a very hair percentage up for 84%, went up to 84.5%. But you can see more drastic examples with something like Golem or 0x or Elf, and obviously Kyber had a huge day yesterday. This is what you look for when it comes to the type of outliers that you want to find when prices are going down. If network growth is going up when price is going down, it's a sign that things could recover very quickly. If we see more of the decline because of fear, external factors, like I said, things could change. But going with what data we have, network growth is showing a bounce here. Same with daily active addresses. It's the same story. Things are jumping back up and prices staying down. So something to look for and consider with your investments. And that's all for me. I'll turn it over to anyone else who wants to speak a little.
I think Dino has some trouble with his mic, so maybe he'll need a little bit of time to fix that.
Okay.
Meanwhile, I can probably make a quick recap of what happened with MVRV ratios in the last week. If you remember, when we talked at the end of last week, like that was February 14th, I think. So maybe that was actually 2 weeks ago. I was back then a bit concerned that we are seeing a little bit elevated values for MVRV for Ethereum. And it was approaching this. So actually we integrated these time-bound MVRVs now on Sunbase. And if you're a pro subscriber, you can see the latest value for this metric. And you can see that for the last year, the half-year MVRV was approaching pretty much the levels that we saw from the previous large bull run that reached $340 for Ethereum. So it was reaching, like, in this particular case, 56%, while during this bull run, at the peak price, it was 62%. Before that, it reached like 77 or 70%. So it seemed to be a bit excessive for Ethereum. And I was a bit concerned that maybe a price correction might be on the way. And actually that happened. So the Ethereum reached to 270 and then started to decline from there. And actually it happened, as you can see here, this pattern happens again, like the price kind of continued to push from this peak of MVRV from 260 to 270, but actually the MVRV was declining. And just to remind people what this ratio is actually giving us, this is the average profit or loss of the whole network, in this particular case, of all the tokens that moved in the last 180 days. So for the last half a year. So this nicely accounts for tokens that are actually in circulation, not something that is left in some wallet with lost keys or something that was acquired at a very low price. So this kind of captures the on-chain activity for the last 180 days and estimates whether these tokens are at profit or at loss now. So if we see very high levels of this ratio that are kind of approaching to the levels from previous bull runs, that's an indication for a potential top, and you shouldn't be considering buying at that levels, because it could be quite dangerous. So, and we can see this pattern, how the price continued to push up, but the ratio was going down, which is an indication that these early acquired tokens at lower price were dumped on the market. So the average profit of the market was decreasing as these cheap coins are dumped. And respectively, it's a pattern that I've seen in many cases before, where it's basically an indication for the end of the bull run. Now we see that the price dropped after that. So right now it's sitting at around 22% average profit for the participants, which is still kind of, I wouldn't say like a great place for a buying territory, Like usually values below 0 and like even below like at minus 10%. Here minus 10% is like 0.9. So that will be like 0.9, 0.8 will be a good territory to buy. Ethereum right now sits at 1.2 or plus 20%. And let's look at Bitcoin, what is going on there. For Bitcoin, actually, it wasn't that bad. So when the price reached $10,200, we were sitting at 60% profit for the network, for the 180 tokens that were active during the 180 days. During the previous bull run, we reached level at plus 8%. So we are far from these extreme values that we saw during the last bull run. And we are sitting right now at about 0. So right now, for the 180-day tokens, we should be like neutral. So on average, the network is neither at profit, not on profit, neither on loss. So in that sense, it kind of makes, from my perspective, kind of makes more sense to extend your portfolio more towards Bitcoin compared to Ethereum at that point. So yeah, I think that's pretty much everything from me.
Yeah, it makes sense. It's interesting to see where things are in terms of MVRV for both Bitcoin and Ethereum, and the long short difference as well is showing something similar to what you're showing. And I agree. I think the MVRV for Bitcoin right now is showing a little more promise because Ethereum is still a little bit on the high side in terms of the market value to realized value. So I would play it safe if you're trying to decide between the two. But then you also have things like NVT, which is showing a little more token circulation for Ethereum than it is for Bitcoin. So this is why we have that we use to make these types of analyses. On both respects, I think that Bitcoin and Ethereum are looking more promising than they are usually. So it's nice to see the market value to realized value comparison here.
Yeah, exactly. Yeah, and I mean, this metric is also available for all other coins. It's actually quite valuable for tracking, really big rallies. For Kyber, we can see that it actually reached quite high levels at the moment. So with regards to MVRV, things doesn't look too good. Like it seems just that the tokens that moved in the last 180 days, they're at a huge profit at the moment. People are sitting on profits of like 120%. And that could mean that at least that was at the peak at 58 cents. So it's possible that we might be seeing it's possible that maybe that was the peak of the market, and there is still plenty of room. Like you can see right now, we're at plus 69%.
Right.
So it seems that still the network is at quite high profit. And generally, in my opinion, you should avoid entering the market when, on average, participants are at very high profit, because if something happens, it's very easy for them to just eliminate their positions and take their profits out and be gone, which is going to cause a crash in the market.
Mm-hmm. Now, do you think that something like this, when the MVRV is this high for a token, it's actually a signal for a top, or do you think that it's simply something where you should avoid entering, so to speak? So for the holders out there of Kyber, an indicator that they should get out of their position?
Well, looking at this MVRV here, to be honest, like 120% at 57 cents, that actually looks pretty high to me. Like, actually, if you see, at least for Kyber, we haven't seen such kind of high levels in the last year. The only time when this MVRV was reached was actually beginning of 2018. where it was like 300%. So, 4.0 means 300% here profit, like 4x pretty much. So it seems to be quite high. Like I wouldn't expect like these MVRVs that we saw in beginning of 2018 that were really, really extreme. And I would not really expect to reach these levels maybe ever. So the market was crazy there. And as the market becomes more mature, we should be seeing lower extremes for this metric. So 2.0 is actually pretty high. And if I would hold Kyber at that point and I'm at profit, I'll probably sell it at this point. Like it just seems to be too high. I mean, you can never actually predict what will be the exact top, but this one here, I think it's a big red sign to me.
Mm-hmm. Interesting.
You can compare this to stuff like synthetics, let's say, because they also had quite a big rally. You can see that for synthetics, the extremes were like 2.5, so 150%, and here 170%. That was when it reached $1.4. So as you see here again, we see like these values above 2, so above 100% average profit. It's just too tempting if you are at 100% profit to eliminate your position at that point, especially when it's taken into account that probably you bought your tokens like a year ago. So
right.
Yeah. And now for synthetics, we're sitting at around 11% NVRV, which is like 11% profit, which means that actually no, it's about 0. Yeah. So it kind of normalized at that point. But the combination of very high NVRV, like pretty much very high NVRV would be a big red sign for me that the price might be reversing and going down. And the combination between a very low NVRV and a project that could potentially be delivering something could be a great signal to buy. Mm-hmm. Because the NVRV could be low because just, I mean, if the project is not something that is going to succeed in the future and it's not going to create anything of value, then, I mean, there is no guarantee that the price is going to go up. But a very low NVRV means that you are buying at a market that is currently potentially undervalued. So potentially there are a lot of investors that are at loss at the moment. They're not going to sell their positions because who wants to lose money? And you are pretty much early in the market. But if you are buying at a market where there are a lot of tokens that are at profits and people can sell them and realize profits, then you're probably too late.
Yeah, it makes sense. And what Valentin is saying is there's definitely other factors that need to be taken into account besides just the raw SRV of something. Maybe, Valentin, it would be cool to see the development activity of synthetics and maybe even Kyber as well, so we can see how the actual project is moving. And as we can see, synthetics has really been exploding with new development. And if you're wondering whether a project is in it for the long haul and they're really trying to develop for a future in crypto, this is the kind of chart you want to see. A rising development activity metric over time like this really shows that the team is confident that they're making something special that can have an impact on blockchain technology in the cryptocurrency world.
Yeah, exactly. So development activity is a great proxy actually. Like if you don't see good development activity, that's a big red sign in my opinion. Because if you have developers working on these platforms, then it's a very good sign. I'm not sure if Kyber is keeping their repositories public.
I'm not sure either.
Yeah, actually they do, and they have a pretty good development activity. Staying at like 50 and So it looks.
Yeah, I mean, the graphs don't always have to look like synthetics where it's just skyrocketing, but at the very least, you should see some sort of trend over a 6-month to 12-month span, like we're seeing with Kyber, where it is rising a bit over time. Obviously, there was even more about a year ago, but at least over the past 6 months, we're seeing an uptrend again, and that shows that the project has some longevity to it, and the team believes in their product. If you look at like a scam coin, could you look up BTCP if it even exists? I'm not sure if it does, because it kind of, no, it doesn't. How about just BCH, Bitcoin Cash? Oh, it does exist. Yeah, go Bitcoin private.
Yeah.
So this was a fork off of Z Classic about 2.5 years ago, somewhere around there. And the development activity, if many of us knew about it back then, we would have been able to see that there was very little. You could even zoom out, go to all. It doesn't even show on all.
No, it's gonna load. It just takes a little bit of time.
Yeah, basically the development activity was going crazy right before the fork of Z Classic. And as soon as the fork happened and everyone said, oh, the price is going to just moon, that's when the developers just exited out of the project, essentially. There was a guy named Rhett who was kind of leading the charge, and everyone was asking him whether the team was working on it or not. And he kept saying, yeah, we're definitely on it. But this graph tells otherwise. We saw a huge steep decline as soon as the fork happened and everyone got excited about it. And you saw very small bounces in price, but basically over time, the development activity dropped off to zero during most days. And that's exactly the kind of project you do not want to be invested in.
Yeah, exactly. Although, I mean, there are projects that are keeping their code base private and they don't disclose.
Right, like Tezos, I think, is an example of one where they're using GitLab. And maybe if you look at that, I'm not sure if we have the GitLab data in yet.
No, we don't have it.
Okay. Well, essentially, you do have some projects that have their development activity kept private. And so they wouldn't be good examples of activity we could track. But we are working more and more to get other sources like GitLab and a few others I can't mention off the top of my head onto our platform so that we have a combined development activity of any token, no matter what source they're using.
Yeah. So that's true.
Cool.
Valentin, I have a question.
Yeah.
Why do you use this specific time range for MVRV, 180 days?
Well, in this particular case, actually doesn't matter that much. We can pick, like we have a bunch of ranges here from 1 day to 10 years. But 180 days kind of represents relatively long-time investors, while choosing a range like 7 days or 30 days is going to represent more short-term investors, moving their coins on chain. Now, in my opinion, taking a larger range should give you a better estimate, I guess, for the long-term trend. It's something like the moving average for the price, like a longer moving average gives you the longer term trend of the price. So here it's a kind of the similar thing. Now, if you choose, let's say 7 days, you're gonna notice that it will be much more choppy, like it's much more noisy. Let me remove the development activity. Yeah, you can see how it's much more like there are peaks and dumps and all that. I mean, here it's a little bit harder to kind of see a long trend. I mean, it makes sense if you want to make some kind of a shorter term prediction, but I believe that this MVRV is more of a long term indicator, not so much for a short term that is going to tell you okay, what I'm going to do this week or next week or whatever. It's more of a long-term one where, yeah, longer intervals makes more sense than shorter ones. So I think 180 days is a kind of a nice one. 90 days also, maybe to a large extent, and also 1 year. And as you go bigger and bigger intervals, you need to keep in mind that not all tokens have that large history. So for example, if I take 10 years for Ethereum, I'm going to pretty much capture all the coins that are being on the market. And I don't want to do that. Like if we look at all the coins, we see that right now we're sitting at 26% profit. No, actually right now we're at 3%. But if I take all the coins that ever existed, then I'm going to account also for probably lost coins. So coins that haven't moved for years. And I'm not so much interested into these. I want to see the recently moved coins, which I'm kind of sure that they're not lost and they're being managed by active investors that will be performing some kind of action. So that will be the people that are going to dump on me if I decide to enter the market at like 70% average profit. These are the people that I want to assess.
Thank you.
Okay. Thank you, guys. Can you hear me?
We can hear you. Welcome back.
All right, cool. Yeah, my internet is super choppy today, so I'm just gonna give it up for Max because I know he also wants to share a few charts before we leave. So Maxim Balashevich, my friend, feel free to share a screen and give it a go.
Dino, my friend, thanks for introduction. Well, I will take over, okay? Sharing the screen. My entire screen. Okay.
Valentine, if you want to disable yours.
I think, wait, is it already mine? No, let me close a few. Too many screens. So here, I wanted to keep it clean. Last time, when I think it was even last week, wow, many things happened in 1 week, right? I think we've been, what date was it? 21st. Okay, so we did quite a journey, at least for Ethereum. And I want to share some update and more thoughts on Ethereum. So we've been 265, now we're by 223, not bad, not bad. So last week we've been sharing this framework, how you can see and spot tops. Okay, luckily for us, we were lucky. You know, you're not always lucky at making calls. It went down, okay. But here is an important addition, and it's good that you do it week by week, because if you do everything at once, it's difficult to follow. And in general, I'm sharing more new things. It's not so easy to follow anyway. Now look into 1 year chart. So I click here on top 1 year chart, and this is if any of you followed Insight, I was referencing to the last year, and I was showing this divergences here. Divergence here, like everywhere, and like going down top token holders. Now it's a 1 year chart, and that means the top which was built under such a condition. It's a long-lasting, relatively long-lasting top. Now, maybe when you've been reading or looking to our predictions last week already inside, you didn't pay attention. What we looked into, it's a 3 month chart. So we've been discussing a relatively short picture. If we come back to 1 year, what we see on Ethereum, it looks quite healthy. Yeah, I mean, with every significant top, there were increase in trading volume here and here, in the social volume, and daily active addresses, and general on a bigger scale, top token holders. Everyone was accumulated, was growing. Just we look in the details at that point of time, and we saw, you know what, it looks not so good. It can fall down, and it did fall down. But at the end of the article, it was also saying it depends on your risk and portfolio management settings. Do you sell everything? Do you sell part of it, or you just trade for it? On a long term, for Ethereum, there is no divergence signs. So what I want to say on the long term, Ethereum is bullish. And one of metrics which was shared by, I think, by Brian or by you, Dino, minus metrics. On the long term, it looks bullish. So don't miss the chance. The bullish wave is coming. We just don't know when exactly. Okay, so it was to understand or to share the differences between time frame when you analyze the market. Market is behaving there, like, always during greeting here. The patterns repeat itself, and they repeat itself on the longer time frames and on the shorter time frames, so-called fractal behavior. So on we spot the stop positioning last week. It was on a relatively short time frame. Now, can we try to predict or identify if we're on the bottom? Now, this is again interesting task. We can apply the same principles we've been using last week when we were talking about the top, but in an inverse. So what you should normally see, you see that the volume, trading volume, was increasing as the price was accelerating down. The same pattern, but you need to look like from upside down. If we can identify that the price declining, but the volume is not increasing anymore, you know what it means. The same on the social price. Here is the top social volume. We're exactly at the middle of the fall down. This is how it should be. If we're lucky and see a decline in the price, but social volume not increasing anymore, you will see divergence, but in the opposite direction. In direct hypothesis, I'm not 100% sure if we can apply it here. It's I personally did not see it working nicely when building the bottom. Typically, at the bottom direct hypothesis like this, it's actually even increasing. But the last one metric in top token holders, what you can see here, they are accumulating again. Yeah. And they start doing their move before the market moves. Yeah. They've been accumulating like 1 or 2 weeks before the last bull market started, and they start dumping the accumulations. Yeah, roughly 1 week or 10 days before the market top. So if this is real accumulation, you might know what it means. Keep the same framework as was shared inside. You can even go maybe more detail on 1 month. Yeah, on 1 month it's even maybe more interesting to see, and experiment and make your call. You can share with us if you think believe it's the bottom or not. And if we make a decision to share our call for the bottom, okay, maybe we will do it. That was my sharing for this time.
And a nice share indeed. Okay, I think we're just about done. So we're approaching an hour mark, and the fact that my internet is still super choppy, I don't think I'm going to be able to present much, but we don't have time anywhere. So anyway, so thank you everyone who joined in to listen to the call live. And thank you to everyone listening or viewing this after the fact, after we published it on YouTube. If you would like to become a part of these calls, let us know. Join our Discord, and if you have specific charts or indicators or chart setups that you want us to look into and discuss with you on one of these calls, let us know, and we'll find you a spot. Also, if you liked what you saw today during this call, we have over 150 different metrics and indicators that we have built over the last 2.5 years using a variation of on-chain social and development information on over 900 cryptocurrencies. So I think it's one of the most comprehensive platform for just behavioral intelligence and figuring out how different market stakeholders behave, from whales to miners to network participants to just the general crowd sentiment. We've got it all. So check out santiment.net and join our Discord to keep these conversations going on a daily basis. And for everyone listening to this live, I'll talk to you again in 7 days.
Thank you. Bye.